Well, big jumps in the commodity markets are becoming a norm for those who are closely watching the trade. This week, nearby corn futures broke $8 per bushel. The nearby soybean futures traded above $17 a bushel, sitting near $17.40 at the midweek. To break down the latest activity in the commodity markets, we were joined on Wednesday by Heather Ramsey from the Agricultural Risk Consulting Group, or ARC Group. Let's begin this week on corn. As we look at that market, we broke $8. A little bit of a surprise, I think, to some people that we saw the $8 mark here in the nearby corn. What were the factors that led to that?
You know, this corn market, it feels surprising, but at the same time, it doesn't feel surprising at all. We've sort of been kind of hinting at possibly $8 futures, and thus, in our state anyways, also hinting at $8 cash, which is a real possibility for this week. We're definitely seeing a bigger push, since the end of March. We're kind of pushing that corn market because of an acreage situation. We're then roll into pushing that old crop and new crop corn market because of a planting situation. It's extremely dry over here in the western side of the Midwest and the plains, and it's a little too wet week over week on the eastern side. And so that's kind of creating this risk situation that leads to an upward movement. So that's kind of piling on. We're also seeing weather in South America look a little bit drier than what they expect to see. There's some statistics out there that if that safrinha corn crop in Brazil, especially into that like Mato Grosso region, doesn't receive at least 3.5 inches for the month, then they start struggling with yield. We're also seeing different export numbers kind of hit the market and influence it. And then just overall, the funds have been in it and been big players, and so they've been helping to drive both the old crop and the new crop. Interesting, in the last couple weeks, we've really seen the new crop start to gain more momentum, which from my standpoint, looking forward as the risk manager, I really love, because it's giving us opportunity to put in really good numbers into that 2022 corn crop at this point in time.
On the soybean side of things, they're kind of riding this momentum, it seems like. I think midweek, as you and I have this conversation, nearby futures market 17.40 or so. Is that just riding the momentum of the corn, or are there other factors driving that market higher?
We're definitely riding here, as well as kind of putting in a little bit of our own focus. When you see the export numbers, soybeans going to China, very supportive at this point in time. We know that this South American crop is probably still going to get some adjustments lower as far as soybean production for this year goes. And so we continue to have private analysts and experts out there adjusting their private forecasts versus USDA and WASDE's forecasts. So there's a lot of debate on how much lower do we go? Is CONAB right? Is USDA right? So we're definitely swinging that market higher based on those what if kind of scenarios. And even with a higher acreage number in the U.S., we still need that. We need those beans. We kind of need all of a sudden to find, another 5 to 7 million acres total crop to really change kind of the trajectory of where corn and soybeans are at right now. And quite frankly, we're not going to find that across the U.S.
You mentioned when it comes to these markets, the planting conversation is in full force at this point. Yes. In the east, we've got a lot of rain, it seems like. In the west, where you and I are sitting and having this conversation, it's very dry, but the weather has not been ideal. It feels like winter sometimes when you wake up. How closely are you paying attention to that conversation right now? Yeah,
it's definitely top of mind. We want to see really good planting pace, obviously. That means we can get the crop in and things are just going to be wonderful, right? But where you look at the two halves of this, growing belt, so to speak, we have real big problems for different reasons. Obviously, this country, the U.S. farmer can plant a lot of acres in a short amount of time. I don't feel concerned that we're truly behind yet at this point. And, we've learned over the last few years that a later crop doesn't necessarily mean it's all doom and gloom. We've had some of our best yield on corn in the state of Nebraska that's been planted in, May, which mid-May, no less, which seems like, oh my gosh, that's not possible. But we've proven it with our hybrids and our technologies that it really is. So until we start pushing the envelope of looking at a crop that the majority isn't planted till after the 15th of May, approaching June, I don't really know that there's a true issue from a planting progress standpoint. The bigger problem is we're planting into drought conditions on the west. We're planning into mud on the east potentially. We kind of need that balance to come back in line so that we can make it through to some key points in June before we're, kind of concerned about what this crop can do.
Let's hit on the wheat market. Came out this week that the winter wheat crop here in the U.S. worst rating since the spring of 1996. We didn't see the markets react to that, though, did we?
No, we didn't. Not too much. We're so focused on coming back from a holiday weekend and the money flow right now that we didn't see the market go sky high on wheat. Some of that is kind of directly related to what's been going on with Russia. We have the lowest wheat rating on wheat in quite a while, but Russia is still significantly exporting wheat. So the story from 2 months ago that we're going to run out has sort of died a little bit here. Truly, it's a concern. The wheat crop is a concern. We're seeing just terrible, terrible ratings. The market is sort of ebbed and flowed away from that. We're so close to coming into harvest that I think at this point it's like, okay, well, in 2 months we'll know. And it's kind of that same situation where if you're looking at a row crop like corn or soybeans, when we're in August and September, you don't get a ton of market reaction when you're saying it's terrible, it's a terrible crop, right? Because you're so close to harvest at this point, you're like, yeah, we'll just get to harvest and see where it's at.
Just real quick as we wrap up here, Heather, particularly back on the corn and soybean side of things, you mentioned the funds. It seems like as quickly as we've seen the prices go up, they can go back down, right?
Yes. We're super long. I don't know if that's a correct term, but we're very long when it comes to managed money. We've seen it be a little bit higher than this before on corn. We're about the same on soybeans. We're a lot more open interest in wheat right now than where we've been in the past. That can all go away if they decide to follow and chase something else. Right now, the inflation numbers, the interest rate discussions, those are definitely supporting managed money staying in commodities. It's definitely an important number to look at and pay attention to. When we start to see any fallback in managed money and any shift downwards in those positions, that would be kind of your leading indicator that something is about to change. Right now, we're not seeing that. But it could happen at any time. They can move a lot of contracts really fast, so we have to keep an eye on it.
A lot of things to watch. Heather, appreciate you coming to Market Journal.
Thanks, Bryce.